I think one of the most important lessons for market participants to learn on the path to becoming profitable or consistently profitable is to know when the odds are good to buy something and when it's not so good. And a lot of times that can be, the eye is a very good judge when something is good to buy and when not, by just drawing some simple lines. Basically what happens for a lot of people is greed and fear takes over. And so they get into these situations where they're, fearful or greedy of missing out on big rallies, and they chase. And it's one of the biggest problems people have. And I see people, even with a lot of experience, sometimes can't get themselves from chasing stocks higher. So let's have a look at Apple together right now, because I want to show you and put it in perspective for you, that I think Apple right now is not the kind of stock you want to chase, i.e. buy on the long side. So for that, we're going to go to the chart. And we're going to start off with a long-term monthly chart. Yes, that's correct. These are monthly increments. So each one of these bars here represents 1 month of price action. Each candlestick is 1 month of price action. And you can see, going back all the way to the left-hand side of the chart, it goes back all the way to about 2007. And you can see that for the most part, the trajectory that this stock has gone higher in has been in a range, right? These two lines pretty much tell us everything that we need to know. Now, obviously, there was an outlier here, but you can see that that outlier, that rally, that breakout rally that took place in the summer of 2018, that didn't last very long. Ultimately, the stock came plummeting down and retest the lower end of the range. Let's zoom into a weekly chart. Now we're going to make each one of these increments each candlestick a 1 week increment. And here too, you can see that we had another little overshooting move here, but we're still now back at the upper end of this range. So now the question you have to ask yourself is, and I'm going to go back to, actually, let's leave it on the weekly chart and just zoom out long enough so you guys can see this. The question you have to ask yourself is, considering this, let's call it 12-year history of the stock, do you think the odds are good to buy the stock where it is right now? Ask yourself that. I'm not even going to answer it. I mean, I think the answer is pretty clear, but are the odds better to buy it at the lower or even at the middle part of the range than buying it up here, where at most what you can expect and hope for is a breakout, fake-out move considering the long-term trajectory? Again, a lot of people will disrespect a chart like this because A, they don't look at long enough time frames, so this multi-time frame analysis is just another massively crucial part. We talk about it a lot to clients every single day. I talk about it here in the YouTube channel. But, look at a stock like Apple, upper end of the range, there's really no reason to chase it higher. So I would highly encourage anyone to do, to really get a grip on your greed and fear levels. If you can start to do that, take a deep breath. Some people have gone to yoga, drinking ginger tea or something like that. I'm drinking ginger right now for my cold. That's a different reason. No, but all jokes aside, I mean, I think a lot of times people are just way too nervous about the market. And then some people are just way too passive and then just let things deteriorate. You have to find a good medium. And being a good investor and trader is all about basically incorporating into your lifestyle. That does not mean that you're staring at the charts all day long. In fact, it's quite the opposite. But it's about having a rhythm and a process in your trading and investing. And so I hope this is helpful, folks. Again, Apple, not something I want to buy right here. I've showed you the reason why. And with that, I'll talk to you soon.